couple big pieces of economic data coming out before this week is over. Holiday shortened, of course, but we'll get ISM services tomorrow and then jobs on Friday. Right now, the risk radar sits with equities still yellow, but getting pretty close there to have to flip that back to green. Given the futures are still below the highs, that's what I'm waiting for. Are we going to get the breakout? Are we going to test those upper limits of the range that we've been holding into? Bonds, which have been green, saw pushback as yields spiked over the last couple days. It's going to be important to watch the yield curve. It's one of my main charts here. And the dollar, too, which has remained range-bound but firm yellow. For Bitcoin, we got to be trading above 67,000, I think, to shake off the risk of a 60K breakdown. So firstly, S&Ps, the futures next to NVIDIA. What's key here is that we've held our own as NVIDIA has slipped off, but we are fairly range-bound still. We're at the upper end of the range for futures, and we're making highs in the index. Everything is generally very well on track still here for bulls. But since NVIDIA peaked, the market still has had to adjust, and so far the adjustment's been solid, but still some questions about what type of extensive rotation we could get. If the economic data come in right where we want them to, which is the Goldilocks, the sweet spot, not too hot, but at this point reassuring that the economy is not falling off. That means for services tomorrow, you want to see prices paid come in and the top line hold 50. That's the strong point, especially after manufacturing has been sub 50. We need to get services to remain the bedrock of the economy, but without producing too much inflation. Watch to the 10s to the 2s curve. We had steepening over the last few days. Somewhat of a mystery as to why. Something happened around inflation. The inflation print put in the low for the spread, and then we ripped up higher. Maybe the market was underestimating Powell's willing to wait till September. Maybe the market's thinking about fiscal spend on the way after the election. There are multiple different possible explanations. Also, maybe just because the dollar had been firm, yields needed to catch up a bit. So watch the 10s and the 2s. That's going to be an important spread because we've also got bond auctions coming as well. And if those go weak, then you might have further explanation as to what's been going on here. But it is a decent move in the 10s and the 2s. So generally, you'd want to see it steepening. That's the preferable route rather than deeper inversion. So good developments over here in the last few days when it comes to the curve. I'm also watching the dollar next to Bitcoin pretty closely because still that's also giving me a little bit of hesitation to think about the potential for broader rotation when Bitcoin generally has been weak today. Also curious underperformance, down notably again with the 3.5 percentage point spread to the NASDAQ. There's just been repeat weakness in Bitcoin. And while the dollar's been firm, that generally says there's a little bit of tightening atmosphere when you get beyond the mega cap tech stuff that's been doing so well. We just haven't had the animal spirits, real madness. Might be a healthy thing. Might be what allows us to just keep the grind going. But for indications of animal spirits or general madness, Bitcoin's helpful to watch. I'll see you tomorrow and a shortened day. Have a great night.